Welcome back to the bunker. I'm your host, Jason, and I've gotten several requests over the past couple weeks of how exactly do I find these stocks that I swing trade. So I thought I would spend some time this weekend and show you how. So let's get started. So I go to this free tool. It's called FinViz. If you go to finviz.com, and I usually start right here. I really start with the market to see whether we're moving, what direction we're moving in. As of right now, it's stuck in a bullish trend. Still, we're kind of at all-time highs as of what is it, May 10th. And so I like to go and to further increase the odds of stocks that are moving, I like to try to see what sectors are being used as or moving in the same direction as the market, and I try to find stocks that I can trade that are in those markets. So as you can see, the last month and 2 month technology has finally picked back up. It has definitely been lagging over the first half of the year. You see it's only 13%, but you can see we're up 18% for the last 3 months. That means, it was in the red for the first half of the year, first 3 months. We've only come on pretty strong in the last three. So that's kind of how you can use this chart to really identify which sectors are starting to pick up pick up speed. And money or the institutions are starting to buy back into. So technology is up 18 in 3 months, 19% just this 1 month. So if you could see most of that money has come in the last 30 days for the year. So technology is definitely pushing the market higher. We've just gone through most of the technology stock earnings, so now they'll evaluate those numbers, and usually about 3 or 4 days after those numbers come out, we'll see which technology that the institutions are thinking will go higher and which ones that might sell off. So here's the scan I run to try to find those ideas. So keep in mind, let's do technology, communication services for the last energy, but energy's kind of been taking a back seat as of late. It's kind of been tailing down. It kind of got a boost from what was going on over in the other side of the world. Real estate starting to pick up, 4%, 4%. What was it for the year? Real estate down here at 7. So that's kind of been a steady performer. They're kind of the safe places before the risk-on assets take off. All right, so we're going to try to look and find some stocks now. So my screener process. Now you can create a free login on FinViz, and then when you set up these settings that I'll show you today, it's one of my list of scans that I run. Then you can just come back. You won't have to. Well, you'll have it saved. So let's see here now. I'm going to go down to my preset list, and I'm going to go down to my Turtle Swing Bullets Level 2. And I'm going to go over these a little bit just to kind of give you an idea of why I picked what I picked. I usually, right up here at the top, pick U.S. stocks. I try to stick to what I know, and what I know is where I live. So my location here, So my location here is I usually only work with stocks, and I work in the U.S. I could filter it by S&P 500 in here, but I'm not doing that this time. I'm just going to look for U.S. stocks because I'll filter out by other criteria here later down the line. So let's start from left to right. I like to get the hive mind mentality and throw in a hold or better. Usually, like to see the analysts that are professionals, see what they're suggesting people invest into, because that would be where money's going. So I go ahead and pick that spot there. Next, 200-day that is the international sign that a stock is moving in a bullish direction if it's over its 200-day moving average. That's the average stock price of the last 200 days, and it's above that. Usually that's a sign that it is trending in in the direction that I'm trading, which is in the direction of the market. If the market was going down and below the 200, which it's done a couple times this year, I would reverse some of these numbers, and I can kind of go over that if you want. I can make another video about how I look for stocks that are going the other direction when the market's going down. Just let me know in the comments. I like to have an average true value of over 1.5. Usually I like it to be a little bit higher than that. I like my swing trades. The less time I'm in the market, the less opportunity there is for some news event to go against me. So the faster it moves, or volatility it has, the more opportunity is to go the direction I think it's going to go, or go away from it, and then I'm out, and then I can look for a better opportunity. So I kind of like to have it at least move daily 1.5 points in whatever direction it's going. Its range, at least its range. It could go up, down, or it could go up and down, as long as it's moving. That's what we want. We don't want stuff that's not moving when we're trading it. And I like to stay out of the penny stocks, and I consider anything under $10 really to be something I won't get into. So that's why I put this over $7 on this list. In this second column here, I like to see whether a stock is optionable and shortable. And this doesn't really matter for one of my strategies, and it does for the other, but the ability for it to be optionable or shortable means there's going to be volume, and there's going to be trading on both sides. And if there's opportunity on both sides, then there's going to be movement eventually. Average volume, I like the volume of the shares to be over 1 million. Most of the big movers you'll see do somewhere like 10 million shares. But for my swing trades, it doesn't have to move fast every day, but it needs to be something that's active. There's active trading going on. I don't do any of the third column and go over to the fourth column. I've already talked about the stocks only, but what I like to see is order flow. Since I'm looking, the market's going up right now. We're at all-time highs. We're moving up. We've been moving up for quite some time, for about a month and a half. I like to set my first performance parameter is in the last 22 of trading days. At least that's on FizViz. The last 22 trading days, we are higher than we were at the first start of it. So we've been moving up for the last month. And then this is my special criteria. Well, I'll go ahead on this other performance over here. I like to do week up. So I also like to see that in the last week, it's also trading higher than when it opened. So last week, for the last 5 days, when it opened at a certain level, it's actually moved up. Now, it went down and up, it closed higher than it started the week. I like to see those. So this filters everything down to about 100 stocks when I add this last criteria here, which is my 20-day high-low. Now, a pattern that I look for when I'm trading bullish order flow, what I like to see is a Darvas box being set up, and that's where this 20-day high-low. You could do the other turtle trade setup, the 50-day high-low, but I like the 20-day since I'm only doing 1 or 2 week swings. I'm not doing longer-term positions. And 50 trading days, I mean, that's 2 months worth of data. Sometimes that might be a better one. Maybe we'll explore that later on the channel. But for right now, what's been working really well for me is the 20-day. And I like to see it 5%. So the Darvas box, how it kind of works is it sets a high, and then for 3 or 4 days, it doesn't set a new high. It starts pulling back. A lot of times, my favorite setup is when it pulls back and then tests a previous high. That's beautiful. And then it doesn't set a low again for another couple of days, and then it starts to trend back up to that high level, and we're looking for a breakout. That's that Darvas box. You can look him up. He made a lot of money back in the day in the market by drawing these boxes of really its support and resistance, and it works really well. The turtle traders actually used a similar technique where they were looking for breakouts based on that. And then that basically gets us down to 100 stocks. So we went from, let's see, if I clear the whole thing, take the whole thing out, no settings. We got 11,000 with 11,000 stocks in funds, and just by one setting here, we get it down to 100. So now we only have to look at the charts, or if you're financial, that has data here on FinViz as well. We only have to look at certain 100. That's not very good. That's an afternoon, maybe an hour worth of looking at charts. And then I like to pick 5 or 6 to put on a watch list that I'm watching, and then I'll go into my software, put alerts, and set it at these levels. So this is kind of what I was talking about right here. NVIDIA, ironically, it's the first one out of the box. We're after earnings. Are we? Are we after earnings? When is earnings? I want to say we are, but I'll have to look at that. When is NVIDIA earnings? Let's see. NVIDIA earnings May 20th. 10 days. We have not had earnings yet. So this would be one. Now, earnings are risk in themselves. A lot of times I don't pick swings within 10 days. I like to maybe 30 days out and look for something like what we're seeing here, a pullback to a previous high. This is our support level, that blue line right there. What is that? I wonder. Well, this software tells us. FinViz is pretty good about identifying trends. So this is a major support level, as you can see, this blue line that FinViz added automatically. And we pulled back to it, and as soon as we got back to it, we saw an increase in volume, and we went up. That's kind of what I'm looking for. That's the ideal setup when I'm looking for a swing trade. Oh, we lost our... Let's go back. There we are. So this was definitely be on my watch list come Monday to see if we could push higher. And then I'll use this ATR right here and calculate my risk based on my the size of my portfolio. Right now I have a small account, and at 6 points I'll do 2 times the ATR, which would be 12 points. And so that's about 10 shares in my total position. Just about to my 1% risk on my portfolio. And I don't buy the whole 10 shares right off the bat. What I do is I buy half that. So I buy 5 shares of this company, and that'll be about a $70 risk. And I'll put my stop 2 times that ATR right there down below it, and then we'll ride it out. And then if we go up 1 ATR, so 6 points past my entry, which is 215, so about 220, 225, 221. I'll add half of the outstanding that I've allocated to this trade. So I'll add 3, and then I'll add 2 the next time it goes up another 1 ATR, and then my full position of 10 shares will be in. And that's kind of how I do it. Then I manage it after the fact. I'll manage it with depending. I'll probably manage it tighter with this one since earnings is coming up, but I may be completely out of the position by the time earnings come. But we'll see on Monday. If we break out and maybe we get a pullback to that test, would be perfect A+ setup, then I'll be in this one, and I'll give you an update on my shorts. Qualcomm's already taken off, and I actually am in this trade from right here. See how this set a high, then pulled back, and then we come back and break out with volume. This is where I got in about 184 right here, and now we're up 219. I can go over the portfolio here a little bit later. Amazon, we've already broken out. We came back here, but we really didn't set up a box, and we just kind of started going higher. I think that one had earnings earlier in the cycle, so that's most likely what that was. But if you can go back down here, see where that blue line is. This is what I was looking for when I do my scans. Right here, see it pull back down and then come back up, and then we shot up and we keep going up. So I'd hit that breakout. So you would have went with that trade 210, we'd be at 271. Woohoo! That would have been pretty. So I missed that one. AVGO, which is what, Broadcom, I believe. Yeah, Broadcom Inc. That here's your setup here, and we've kind of pulled back into it, and then we've kind of broke out again. I don't see a higher volume. I don't see, but we did get quite a good reversal. We still haven't broke the highs. This will be on my watch list too, Broadcom. And I know it's expensive at 430. Yes, there are other ways to trade this without trading shares, but it's a mover. It moves 14 points. If you can buy $30 or $40 stock that only moves 1 or 2 points, then you're only going to get $2 for every share you have. But this one, you own one of 430, which that might be close to your risk. But if it moves up that 10 points, you make $10. So it works out by average. So you just gotta you make sure you maintain a really good risk tolerance. And if it's too expensive, there's always selling option, a put credit spread on this one, and then you could probably pocket in a week trade, 2-week trade, $50 or $60 if it continues in that, and stay within your risk tolerance. Moderna, it's looping around. Now, I don't really mess with. We know technology stocks are moving based on what we looked at earlier. Moderna was biotechnical, and it's definitely got the pattern. It pulled back a little bit lower than the previous support. That might be. I'll put that on the list. That will be one to watch. See if we get a breakout. I'll have to check earnings on that one. And Marvel 170. This stock's been moving. Like I said, tech. You don't want to be too tech heavy, though. That is another thing that the turtle traders do about risk management. You can only have five positions in any one sector. So you don't want to risk, like, if you're risking 1% of your account per trade, you can't have more than 5% of your whole account in one sector. So, that's the one thing. You have to be selective, follow the rules, but that way, if that one sector pulls back, then your whole portfolio doesn't suffer. But if your whole portfolio, if you had 20 positions and that sector pulled back, you'd be hurting that week or that month. So keep that in mind. Oh, let's see. Google is taking off. Look, XYZ. Block. That's blockchain. Is that blockchain? Is that crypto? You got your circle going right there. See how it's dipped back down? Previous support. And that's actually reclaiming higher lows over here. So it's reclaiming long-term lows. That was boom, rejected. Now we're trying to reclaim that. So if we stay above, what is that, 70, 72, 73, the bottom of this candle here, you stay above that, that might be a one, the next one that'll push to all-time highs. But anyway, that's just some examples. I'm thinking about doing a morning show and going over my 5 best picks. If you're interested in that, type live, comment live on this video. And then if I get maybe 10 or 15 people interested, then I may log on early in the morning and go and break down my top 5 or 6 stocks that I'll be watching for my swing trades for the week. But I hope this helps you out. Like I said, once again, you can pause the video for the settings. If you'd really like a hard copy of it, I am currently creating a PDF that I can send to you. Just let me know in the comments that you'd like the hard copy, and I can get that out to you. So that's about it, I think, for this weekend. Well, I hope you enjoyed tonight's content, and I hope this scan really helps you on your journey in swing trading. If you'd like to see how I manage these positions on a daily basis, check out this video and it'll help you. Take care now. Bye-bye then.